Good afternoon, ladies and gentlemen. How's everyone doing today? My name is Thomas, and I will conduct the following trading session for you guys. Let's first of all share some stories. If you have any questions, I will be very happy to answer them. And also, as always, right, the more dialogue, the more conversation we have, the better our results become. First of all, let me go ahead and start off with a few of my recent trading ideas. My most recent trading idea is this one. It is USD GPY. It is my I think it's my third attempt. Okay, so I've lost already 2 times. I was expecting this breakout number 1, this breakout number 2. So basically so the idea in my previous 2 trades was the break of 150, right? This strategic psychological level. So whenever the yen is trading above 150, it basically means it implies that we are in a very strong bullish trend. And that's my third attempt now. Right, so third attempt, and I'm hoping that this time price will actually go up. So the USD, the United States dollar, dropped yesterday significantly, and basically major indices went up. So I mean, when the value of the United States dollar drops like that, it's not really bad for the United States. In fact, it's kind of like the opposite thing right now, because the United States dollar is so much overpriced. It's really overpriced. It's really trading too high compared to most currencies in the world, and it's making the United States economy basically it lowers its competitiveness, right? So it's not as competitive as it used to be before, because just because the United States dollar is so high, and all products, all costs, pretty much everything in the United States just costs a fortune. That is why some cool off, some drop in the value of the United States dollar is actually good for the United States economy, and we could see that yesterday with this huge green candlestick. So in my in my color scheme, it's actually blue, but obviously it's green, right? It's a bullish candlestick, and I think we are so plus more than 10%, like close to 15% growth in just in little under 3 weeks. I think, yeah, like less than 3 weeks from October 27th, and we are already trading at 60,000, so almost all-time high on Nasdaq. We are about to break it. No, it was higher maybe earlier in 2021. But I mean, wow, look at that! We are back at 16,000, which is a very strong trend, a very strong uptrend. So we managed to break out from this downwards channel, downwards. So let me go ahead. Right, and right. So there was this downwards channel, and bam, 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 and now we are upwards. So double top formation, right? So we have come so close to this double top formation, and this might be a sign of reversal here, right? What else do I want to talk about? So let's have a quick look at my other trade. Gold, just a $10 trade, not interesting at all. Now, Cardano and other cryptos. So I still my sentiment, my view on the crypto market remains bullish despite this recent pullback. And I mean, like, without pullbacks, you cannot move further up. You need to have small pullbacks in order to keep progressing upwards. So I remain bullish, and I think it's not late to enter this market yet, and we have so much room ahead of us. And my recent most successful trade, or one of the most successful trades of my recent trades, is actually the euro against the United States dollar. I made a very nice bet here. I made a very good trade. It's kind of like this perfect cup and handle formation. And it basically resulted in this breakout yesterday. And now I'm enjoying plus 243% with the multiplier of, what's the multiplier in my trades here? 100. All right, so plus 2.5% multiplied by 100 equals plus 250% of profits almost. When Olymp Trade will be available in the United States, I don't think will be able to be presented in the United States, because the United States have pretty strict regulations when it comes to financial trading, and they have their financial commission called SEC, so Securities and Exchange Commission, and they basically have very strict rules, policies, and there is a huge process. But if you want to trade an instrument that is similar to our mode of trading, our main mode of trading, which is FTT, there is an exchange called NADEX. I don't remember what it stands for, but it's basically some derivatives exchange, and nadex.com, I think, and that's well, I visited there. I didn't sign up on that platform, but that is an interesting exchange, and they have really interesting modes of trading. So I suggest that you check it out if you are in the United States right now, and that would be a nice trading exchange to basically practice your trading skills in there. In Euro USD, okay, I don't know what that question means. So, all right, guys, we are back to trading, and let me go ahead and show you a strategy today, which is called the Horizon strategy. So let's go ahead, click here, press Add More Tools, and let's scroll down and find this strategy. The strategy's name is Horizon. So it is one of our expert category strategy, and once you click it, you're going to see a picture like this. Basically, we have 1, 2, 3, 4 components. So component number 1 and 2, these are SMA 5 and SMA 22. So the main signal in this strategy appears when these two simple moving averages cross. That's entry point number 1. Next we have the MACD indicator, and the last but not least is the Heikin-Ashi candlestick itself, and we need to pay attention to what color it is. So I think the best way to learn something is to watch someone do it live on practice. So let me go ahead and do it. First of all, time frame 1 minute of candlesticks and duration 3 minutes. So I usually follow this very basic principle of you need to, in order to define duration of trades, you need to multiply your current time frame by 3. So let's imagine my working time frame equals 5 minutes, then my default duration would becomes 15 minutes. So it's a very simple logic that I follow. But of course, you can use your own methods, ways, and kind of like different types of expirations, durations of trades. So that is basically up to you as a trader to find out something, to figure out something that works the best for you. Because two traders might have the same trading tool in their hands, and they might actually have totally different results. So, dear traders, asset number 1, which I wanna open a trade at, is going to be aromatic Thai index. And so, look, first of all, what I'm looking for in this strategy when I scroll, when I move from one asset to another. I need to identify the moment when the two SMAs cross. So the 5 SMA crosses the 22 SMA, and in this example, it happened upwards. Now, the second thing in this strategy that I need to check is I need to have a look at the Heikin Ashi candlesticks, and I need to see what color it is right now. So in this case, well, the color is green, right? It's so in this color scheme. Okay, let's do the standard one. So we go to setting, appearance, and let's go to like dark. Okay, now it's just to avoid any sort of confusion. Right, green candlesticks, green Heikin Ashi candlesticks, and the MACD. What is it indicating right now? So it indicates upwards trend because the MACD area is above the middle line and it's growing. So at this point, the picture looked like this. So the MACD was growing, the Heikin Ashi color was green, and the crossing happened. So the 5 SMA crossed the 22 SMA from bottom upwards. So that is a very clear signal according to this strategy into the upwards direction. All right. While Olymp Trade stopped giving, okay, I'm just reading a question from our chat. Okay, let me go ahead and open a trade. Yeah, here it is. Astro Index. I think this index is available for Indian traders only. So traders whose registration is in India or happened in India. So yeah, once again, yellow line crosses the blue line upwards. The Heikin Ashi color is green, and the area is above the zero line and it's growing. So basically all yeah, right, here it is. Well, so let me go ahead and then I want to answer that question about promo codes, right? So yeah, another one, cricket index. Let's see, the MACD area is about to cross the zero line, so let's watch this closely. What happened with promo codes? Well, we decided to stop giving out promo codes for bonuses because basically for a very obvious reason. Okay, there are two parts in this issue. So issue number one, by sort of removing bonuses, by stopping this bonuses campaign, like we don't give out bonuses anymore, we managed to increase profitability on many assets, and we managed to do so significantly. And instead of having maximum profitability of 90%, now we have assets with 93, 91%. So it doesn't seem like a lot, but if you do a little bit calculations and a little bit of stats, then you're going to be surprised how much these 3% matter if you open somewhere between 500 trades and 1,000 trades. And the more trades you make, the bigger that difference grows. So that's a huge improvement. In fact, it's not really noticeable when you open trades of, say, like, what would be the difference? Like, I make 21.25 with 85, and here I make 22.75. So it seems that it's just $1.50 or $1.25, but imagine it's 100 trades. So the difference becomes 100 or $125. So everything is really understood when you look at it in the from kind of afar, from the statistics, and you realize that you actually open many trades per month. And yeah, option number the second answer is that so the main problem which I saw with bonuses, and that's why I don't like bonuses when I trade, for example, like when I trade or when I traded before, I sort of almost never used bonuses because these bonuses, so the problem with bonuses is that most of the time, first, so if you trade and your trading results are negative, you're losing first you lose your money, the real money, the actual money that you have in your account, and then only in the end, once you've lost all your funds in your account, you start basically working on bonuses or losing bonuses. So bonuses act as some sort of an airbag in a car, kind of like this cushion that helps you. But see, the point is this: if you are a skilled trader and you know how to make money, you don't really need those bonuses, because you just won't need them because you're making profits. And at the same time, okay, CAC 80, whatever. I don't like that asset anyways. Now, my first, finally, a downwards trade. The Canadian dollar against the JPY, right, in the downwards direction. And let's see. Oh gosh, so everything looked so well, so nice. Okay. Fortunately, this trade closes with a loss. My first losing trade, 1, 2. So 2 winning trades and 1 losing trade so far. So guys, going back to that question about bonuses. Yes, the problem with bonuses is that if you don't, well, I mean, if you're, I don't want to say like if you don't know how to trade, or I'll just say it this way: if your trading ends with losses, it doesn't really matter if you have bonuses or you don't have bonuses. You're gonna lose them, the funds and the bonuses anyways, your funds and bonuses anyways. So bonuses, they don't really help that much. I mean, there are certain cases, certain instances where bonuses actually work. They act as a form of leverage, like multiplier on Forex. But that is such a rare case that I just feel it's really like you use it maybe sometimes, and then at the same time, when it comes to profitability, you pretty much use it in every winning trade. So basically, in every second trade or more, it makes difference. It makes the difference. But bonuses, well, not so much. Not so much. Bonuses are fine, but I mean, it's not really as important as I would say increased profitability. So our new high yield accounts, they matter more, and you can actually do this very simple maths. I don't have the profitability calculator with me right now, but well, trust me. I mean, once you start doing these calculations, you realize how important that is. All right, let's watch this Arabian index closing. 3 seconds, and okay, so I was almost there, but no. And CAD GPY. Okay, so this might have been a bear's trap, but we'll see. All right. Are there any other questions that you want to ask me? So let's try this this new trade, the euro against the Australian dollar, and let's have a thorough look at this trade, at this situation. So as you can see, we have this crossing. So the 5 SMA, the yellow one, crosses the blue one downwards from top downwards, from top to the bottom. Next, we can see that the Heikin-Ashi color currently is red, so we are in this downtrend, downwards or bearish trend. And one final thing is the MACD indicator, which is well below the 0 line. So yeah, basically all the conditions are there. All the components, all 3 components. So layer of confirmation number 1, or I would say in this case we can actually we can call this as the main signal in this strategy. So the main signal comes when the 2 SMAs cross. And then we have two layers of confirmation. Layer of confirmation number one is the high Kanashi color candlestick, and the next one is the MACD indicator. Oh, beautiful. So outcut AUD CAD, the Australia against the Canadian dollar upwards. Beautiful. And I have one more trade, the euro against the Australia dollar. All right. And let's keep scanning. Oh, GBP AUD. So the pound against the United States dollar. The Australian dollar. This could have been a nice down trade, as you can see here. Yeah, pretty nice. That is a possible trade, but I mean, okay, now 1, 2, 3, 4. So 4 candlesticks ago, that's a little too late for a signal. So in fact, you cannot, according to this strategy. Okay, so this one GBP CAD. Okay, we can take advantage of this trade, of this signal, because it is a fresh signal. What do I mean by fresh signals or recent signals? So these signals have to happen within the last maybe 3, 4, but not more than 4 candlesticks ago. So if more than 4 candlesticks have passed, then you just basically like forget about this trade and move on to the next asset. So there is no need to chase trades. Don't chase charts, don't chase trades, because that is one of the main reasons why traders lose money, because they start chasing charts. Okay, so euro AUD. Oh my god, in the last few seconds, turn off. Yeah, that's what I'm saying. Sometimes timing is very important. Well, I mean, timing here was good. It's just, unfortunately, there was this reversal in the middle of the trade towards the end of the trade. So, unfortunately, this is the case sometimes. So a question here about low profitability percentage on CAD CHF, CHF JPY. So, well, here's the thing. Some assets are more popular than other assets. It's just, there is a direct correlation between the popularity of asset and possible potential profit on that asset. So in that case, if we talk about GBP, USD, the pound, the euro, all these major assets, the majors, there is this nickname for them, it's majors. So usually you have many traders opening trades and there is high liquidity on those assets. And at the same time, you might sometimes have assets with very low profitability. And usually these are less popular assets, like, well, I don't even know, some exotic ones like platinum, natural gas. Not sure about Bitcoin. Sometimes it, even though it's quite active, but it just drops. So the profitability drops here. But assets like this one, USD, so the USD against the Norwegian krone, the Mexican peso, even USD CHF, the United States dollar against the Swiss franc, the profitability can oftentimes drop quite significantly. Right, NZD CHF, even though this looks like a nice trading signal, let's open a trade in the amount of $1. So I don't want to risk here, but $1 just to execute this strategy, that's totally fine. Like, you can always change amount of the trade. Like this one, Euro NZD. Let's go ahead and try. Why not? $1. It's not gonna make me rich, or it's not gonna make me broke. But for the sake of executing this strategy, why not? And then now move on to high profitability assets. Okay, so it's quite a tricky situation here, USD cut. So this is what I'm saying about layers of confirmation and why they are important. So first of all, we have this crossing. So otherwise, it would look like this, but then the next candlestick is red. So maybe you want to pay more attention to it and maybe wait for a second to see how it will unfold, how the story will unfold. And then basically after you see the second red one, I would probably not open an up trade here. So that's my view, and that is why I have this concept of layers of confirmation. How did my trade close? Okay, so Asia Composite Index, nice. So this time I was lucky. It closed with 1 pip difference in my favor, which is good. We saw some of my past signals or trades that closed kind of on the last second with a loss, but here's the opposite. Cut GPY. Okay, so this might be a reversal. So the main problem with trading strategies is that sometimes you just end up sort of getting in this reversal like pullback situation, especially after a series of big red candlesticks. So that's probably the main kind of like the main nuance about this strategy and about all trading about all trading strategies. So just be aware of this fact. Well, yeah. Other than that, I think this strategy is very good. Yes, it might have sometimes you might have fewer losing trades or fewer winning trades, but overall, you want to jump, you want to decide, you want to sort of come to conclusions about a certain strategy after you open, maybe 50. Oh, 2 trades. After opening 50 trades, maybe 100 trades. So the more, the better. Because then it basically proves that your strategy is right. It's a correct strategy, or it can prove the opposite. So if you open 50 trades, you can see whether this strategy is for you or not. And if it's not, then you can go ahead and basically pick a new strategy, another one. So why I open trades so fast and so many sometimes? Well, because I know this strategy so well that all I need to do is I need to have a quick look at the chart, and then basically I already know what I need to see, what I want to find on the charts. And in my life, I've seen, I don't know how many hundreds of thousands trades, hundreds of thousands of charts I've seen in my life. So it's called this repetitive action. It's like, if you want to play, so trading, there is a good analogy between trading and sports, right? So in sports, for example, you want to become a basketball player. So all you do in your trainings is you basically learn how to throw a basketball from different parts of the field or from the court or stadium. So the same the same principle applies to trading. Basically, what we do all day long when we trade is we basically look at different patterns, different situations, and we try to improve, try to score. Okay, let's try Cafina index. I think it's stable, and this new candlestick is green after 2 red candlesticks. So I think uptrend continues, and this breakout, this crossing of the yellow line, of the blue line, is good, and we can open an up trade here. So it's all about repetition. Sometimes, how you become a good basketball player or like a football player or any kind of sports player. Basically, you do the same thing over and over again, like thousands or tens of thousands shots. So So yeah, wow. Some news came out. Oh yeah, that's right. 15:30 my local time. We have core retails from the United States. Came better than expected. PPI worse than expected, and retail sales better than expected in the United States. So it's mixed news, but the market basically decides that wow. Wow, the market is so volatile. Wow, look at Nasdaq. Guys, Nasdaq just boom. I know it's so crazy. It's just how do you trade? You just basically the best strategy is to avoid these news because first we have this for 1 minute the market goes up and then now the market goes down. So I don't know. It's because many traders and many like my fellow colleagues, they ask me about trading on the news, like fundamental analysis. And one of the best piece of advice I can give you is sometimes just want to avoid the news, trading on the news, and then sort of just be aware that certain news is about to be released, and then open trades accordingly afterwards. So don't try and predict where prices will go because oftentimes we don't know, and the market just behaves in a very strange manner. It just just explodes and then it starts going up or down. And almost no one knows. I mean, only like maybe 10 people in some government agencies know what the possible outcome of certain news would be. Like even now, so we have 4 huge red candlesticks. Now, what will be the color of the next candlestick? Probably it'll be green, I think, after this one, like reversal. But it's hard to tell. Yeah, like this one, it's just mixed news. We have 2 positive news and 1 negative. So which one prevails and how market traders basically interpret that? It's the mystery. It's really mysterious sometimes how they like, decide to play along with that news. Alrighty, so guys, I think I'm gonna have to stop here. I just think it's not really the right kind of market right now, since yeah, it's just not really going along with the technical analysis on most assets except a few. Right, so let's wait for this final trade of mine. So far, I think I had, let's count. Let's do the calculations. Let's count. 1, 2, 3, 4, 5, 6, 7, 8 winning trades, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so I have 8 winning trades and 10 losing trades, and 1 more trade will be the decisive one. So we'll see. Well, it won't be decisive one, but just to give you an idea. So, guys, the idea with any trading strategy is to do back testing when you open trades in very small amounts, but you open a big number of them, and after maybe 50 trades, you sort of come to a conclusion, come to realization whether this strategy is for you or maybe it's not. Okay, so in order to do that, you need to open many trades. So just opening 20 trades is not enough. Like in my case, 19 trades is not enough. So ideally you want to open, like I said, 50 trades, and then sort of decide whether you like the strategy, where the market really, whether you really have this advantage over the market, or like statistical advantage, that's what I'm talking about, or it's just a random strategy and it's not really giving you this strategic advantage over the market. On average, how many FTT trades you open, Thomas? So, well, like I said, recently, in my recent trades, in my recent maybe 2-3 years, I already don't open that many FTT trades per day. I have so many various, you cannot even imagine how many different positions I have on different assets as of now. And when you start having many trades, many positions on various long-term accounts, you just don't have time to sort of open too many FTT trades. But despite that, I sometimes do, and I mean, like, I sort of discourage you from opening, these news trades, but sometimes I do open them myself, like 1-minute trades. I mean, like, I'm really at this level where I can risk a little bit of money in order to make more money. But when you start, so these trades are not really compliant with my trading plan, with my trading strategy, but I know that I won't really be opening too many of them. I might open a few of them. So it's really a matter of your trading discipline, how disciplined you are, and how well you can control your risks. So profitable trades today 9, my success rate 48%, my baseline success rate 55%. So that's what you need to have in order to stay profitable in trading. You need to have with fixed amount of trades that I showed you with $25, you need to have at least 55%. So in reality, when you trade 93%, 91%, you need 52% profitable trades. That's how it is, but 55 basically applies to 82%, but that is a bare minimum. Like, it's a baseline, right? That's why it's called baseline success rate, not, for example, like average success rate or something like that. So, dear traders, thank you very much for watching this webinar. I hope that you liked this strategy and you can take something with you from this strategy. And I'm wishing you a wonderful trading week, trading day, and I will see you next Monday with my market review. So have a wonderful day, guys, and I will see you shortly. Bye-bye.